Equities welcome you all to the Q1 FY22 results conference call of IFB Industries Limited. The management is represented by Mr. Govind Chatterjee, Director and CFO, Mr. Rajasankar Ray, MD and CEO, Home Appliance Division, Mr. Arup Das, Head of Marketing Engineering Division, and Mr. Anand Reddy, CEO, Motor Division. I now hand over the call to the management for their opening remarks, post which we can take questions from the participants. Over to you, sir.
Thank you, Mayank. Thank you. Good afternoon to all of you. I welcome you all for IFB Industries Investors Call for the first quarter of FY22. We have with us Mr. Rajasankar Ray, MD and CEO of Home Appliance Division, Mr. Arup Das, Head of Marketing Engineering Division, and Mr. Anand Reddy, CEO of Motor Division. I hope all of you and your families are safe and healthy during this trying time. As the pandemic spread, our priority was to ensure health and well-being of our employees, including arrangement for vaccination, and ensure business continuity without disruption of business. During the first quarter ended June 21, the company has reported a total income of 556 crores, a growth of 96% over the corresponding quarter of the previous year, which is mainly because last year first quarter was bad because of the lockdown. EBITDA for the quarter was minus 30 crores as against minus 29 crores during the corresponding quarter of the previous year. Business during the second quarter was impacted due to the second wave of COVID. Although revenue improved substantially during the year, but it was below expectation, as sale during the period mid-April to mid-June was not up to the expectation and low. Revenue during the month was very, very low, month of May. April sales were also low, but sales started picking up from the mid of June. The major portion of AC sales in April and May was washed out due to the pandemic. Due to a complete shutdown last year, certain expenditures were low. During this quarter, the commodity price hike has resulted in material cost increase by 14 to 15 crores. Besides that, in last year we took graded cut for the employees as well as casual counter sales representatives, totaling around 14-15 crores. Besides that, since we could not give increment last year, we have given increment this year in line with the competition and others. And also during this first quarter, we have spent some amount of money on selling and admin expenses. As a result, despite revenue going up substantially, we could not make profit. But going forward, even in the June and July, the sale growth is quite substantial, and we are expecting to get back to the rhythm. With this, I will request you to start the question and answer session.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The first question is from the line of Mayank Bhandari from Nirmal Bang. Please go ahead.
Yes. Sir, I had questions particular to the realization during the quarter. So when I look at the microwave oven business, that business has seen growth of almost 144% FY21 is almost 6740. So, sir, how is the realization increasing so much? I mean, how much price hike you have taken, or how much is the product composition changing? That was particular for microwave oven, but we can highlight for other categories also, like how different, how much price hike you have taken, or how much realization have been impacted across the category.
So, this is Rakshankar here. The answer to the part related to the price increase is that the price increase with respect to last year, which was effected in January of this calendar year, would be varying between 4 to, let's say, 6%. In the case of microwave, the increase in value realization that you are seeing is because there has been quite a significant shift to the convection series microwave. With a reduction in the entry-level microwave, which is the solo microwave. So some amount of benefit is coming from that. The impact of the price increase would be roughly between 4 to 6%.
Okay.
If you recall, specifically the case of the microwave, we had shared earlier that there were two things we've been working on, is economic models with better realizations based on feature capacity, etc. So that work will be completed over the last 1 year. And there has been a mix in terms of the convection microwave. So, sure.
Okay. Okay. So overall, you are saying 4 to 6% price increase across the category.
Yeah, that's right.
Okay. And in particularly dishwasher, sir, we have seen 88 crore of revenue in Q4 FY21, and now in 1Q FY21 it is almost 41 crore, and I guess this quarter is impacted by lockdown and also dishwasher. What is the run rate we could expect going forward? Is it a category where we can get we can be 300 crore kind of yearly revenue?
Our assessment is that the immediate potential which we are working on would be roughly about 100,000 dishwashers for the year, which would be about 300 to 350 crore.
Okay, for the full year.
Yeah.
Okay. And similarly, expectation in AC business?
Sorry?
Expectation in AC business?
So, what we've also shared as a part of the investor report is that our internal target is to reach about 400,000 ACs for this year. But given the fact that there might be a third wave and there may be some disruption in the months ahead, this could also be about 300,000 ACs for the year. But our internal target currently is at 400,000 ACs for the year.
Okay, still it is 400,000 AC per year.
Yes, that's right.
Okay. And if I, sir, come to your modular kitchen and modular kitchen portion and built-in ovens and chimney and hobs portion, as I can read from the presentation, there is a target of 5 crore per month for the modular kitchen, and there is a target of 5 crore per month for the built-in ovens and chimney and hobs. So basically, we are expecting a category of about 120 crore per annum. Is it true to understand, or 60 crore per annum overall from modular kitchen?
No, it is, if you add modular kitchens and the kitchen appliances, then both put together, our immediate target is to make these two together into a 120 crore per annum target here.
120 crore per annum target.
Yeah, so the 5 plus 5 basically.
Okay, 5 plus 5. Okay. And sir, as we had highlighted in last quarter that the competition did not take price rise and because of which we have lost market share. So, any particular data points you have in terms of around market share, how much we have lost last quarter, in this quarter, how much we have recouped the market share, and maybe next 2 quarter, what is the expectation in terms of recouping the market share?
So, our understanding is that in this quarter, we have recovered share, a substantial portion of whatever we lost in February and March. But we are waiting for some more data points, which will come maybe by the first week of September. As we had shared earlier, based on actions that we are taking in sales, we hope to recover whatever shares we lost in quarter four of last year, by the end of Q2 and by Q3 of this year.
Okay. Okay. By the end of Q2 and Q3.
Yeah.
And sir, if I may ask you, like in the industry, in the white goods industry, probably in the washing machine category, which brand would be losing share? Any industry insights you can provide on that?
Which brand would be losing share?
Yeah, I mean, is there any particular brand which is losing market share, or is there any particular? I mean, just want to understand the industry trend.
So if you see fully automatic washing machines, which is front loads and top loads, then it is essentially four brands that have the bulk of the market. So it is LG, Samsung, Whirlpool, and IFB. And there is also a Bosch and Siemens together. So if you look at the shares between these five, if you look at the last, let's say, year and a half, 2 years, it's more or less constant. Specific to IFB, we did lose shares in the month of February, March, and early April, as we had shared in the previous call. That got distributed amongst the other players, and our agenda is to get that loss.
Okay.
Does that answer your question?
Yeah, I mean, partly, but I mean, basically in terms of industry, what is happening? Is there any player losing share, or what else is changing?
So there is no impact from any new player, if that is what you are wanting to understand.
Yeah, we have players like Voltas Beko and all.
No, there is no significant impact from any new entrant.
Okay. Okay. And lastly, sir, are there more price hike expected in this particular month, or because some of the players are indicating that, and from our channel check, we can understand that there are more price hikes coming in the white goods category. Is it so that we are taking more price hike in this quarter or before the festive season starts?
No, so there is a price hike that should be expected. So specific to IFB, as we have also shared in the presentation, we have had material cost unrecovered amount in Q1, which needs to be recovered. Different players will have different portions of unrecovered material cost. This is an issue. I think we are just trying to work out when that price rise should become effective. So if the market stabilize, then over the next few months, you will see another round of price increases.
Mm-hmm. Okay. And last question, sir, what is the CapEx we should expect, particularly in the engineering motor division going forward?
Motor division indicated 34 crores is CapEx.
34 crore this year.
Yeah.
And from that, what is the asset turnover we should expect?
Anand.
This is Anand here. We are expecting a turnover of around 120 to 140 crores out of that 34 crores investment.
Okay. Yeah, so that's it from my side.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then one on your touchtone telephone. I'd like to remind all participants, if you have a question, please press star then one. The next question is from the line of Prateek Podar from Nippon India Mutual Fund. Please go ahead.
But just from a medium-term perspective, if you could talk about EBITDA margins in the home appliances division, and when do we see margins on a normalized, what kind of normalized levels of margins can we see in this business?
Normally we do not give any guidance on the margin, but the first quarter was not a normal period. But we expect to come back to the normal margin level from this quarter, number 2. And our target is to reach double digit. But depending upon the situation due to COVID, because if third wave comes, then it would be different. But as of now, with the current situation, although there are issues on commodity price hike, like Mr. Ray explained, that the price hike that happened, we could not recover from the pass on to the customer. So other than that, we are hopeful of coming back to the normal margin level from the second, third quarter.
And sir, when you talk about double-digit EBITDA margin, can you just help me understand what will drive this? In the sense, which categories, because I understand certain of your investments would have not been fully utilized. So just from a category perspective, where do you see or what kind of revenues are needed to get to that kind of level of double-digit margin?
So,
Sir, will you answer?
Yeah. Rajshankar here. There are 3 actions. And if you look at the quarter 3 performance of appliances, that is the sort of consistent level that we need to target. And there are 3 key actions for that. The first is that we have been affected in quarter 4 and quarter 1 now by a very rapid increase in the commodity prices, which completely we have not been able to pass into the market. So I am treating this as a sort of a 1 quarter or a 2 quarter problem, because ultimately this will go to the market. But in the immediate term, this material cost increase is a problem on the margin side. So this is the first action. The second action is that the investment that we made for air conditioners, and we went into the market right in the middle of the start of last year's lockdown, which was March 20. So March 20 and now August 21, and this complete period has been affected by lockdown, etc. We have not been able to get the volume in line with what we need from the capacity that we've installed. So between August now and March of this fiscal year, this is the second issue that needs to be fixed, which is the volume on the air conditioner segment. This is the second one. And the third point, which is your specific questions on what sort of revenue levels give you the kind of healthy margin that you require. So if you take our last year quarter 3 as reference, and you look at our margin profile of the quarter 3, then that sort of revenue with the first 2 actions completed gives us the sustainable margin profile that Mr. Chatterjee spoke about.
Got it.
So 3 actions.
No, this is very helpful, sir. Just one more thing. There are certain categories like this modular kitchens, built-in ovens, chimneys, hobs. I was just asking, today at what level are they breaking even? Are you breaking even in these categories, or what kind of scale is required to make company level margins or the normalized quarter 3 margin?
So, the gross margin profiles on these categories is very high. In fact, they are among the highest gross margin categories we have. Now, they don't really have fixed costs. What is there is in terms of manning cost. So, we are not losing money, but the key thing about these categories is the potential going forward. So, if you look at kitchen appliances and the fact that every kitchen requires this and is becoming more conscious about having a chimney in the kitchen, if you look at modular kitchens and the fact that, 99% is all carpenter-run segments today, these are investments for the future. So we are not losing money. They have high gross margin profiles, and they are good bets for the future. Does that answer your question, please?
Yeah. So, can I take it as that as of now, on the EBITDA level, these two business segments are not EBITDA negative? Is that a correct understanding?
If you were to apportion basically company overheads on them, then they might be negative. So let's say in quarter one, if at a company level we are negative, then these segments are also negative. But if you look at them at gross margin level, they are much healthier than other segments.
Got it. And sir,
have I been able to answer your question?
Yeah. No, I understood from where you're coming from. Got it. And lastly, just would you like to consolidate the categories on which you are focused, or you would like to add more categories? Because
No, we don't see any addition of any category in this fiscal year. And the only other category on which the company is currently under evaluation is the refrigerator, which we had shared earlier. But for the revenue potential that we need to realize, the current categories that we are in are good now.
Got it. And sir, one question on the AC side, you talked about OEM sales also, right? Is this a stopgap arrangement for full utilization of that plant? And would eventually we see within the plant the mix of ACs going more towards IFB as you gain scale in the market?
So our intention is to do both brand and OEM. So OEM is not a short-term play. Yes, definitely the OEM segment helps plant overhead absorption. And we have also shared earlier that, it will help us to utilize the plant to capacity faster. Going forward, I would expect that the brand sales will of course rise much more than the OEM, but the OEMs will remain a significant portion of our plant capacity.
Got it.
We are in this for the long haul. It's not a short-term thing.
No, the point is that eventually, it is not that AC sales will stagnate. The market is growing. Obviously, last 2 years have had COVID, as a result of which the true potential of the industry could not be realized. And I'm assuming in the midterm, when COVID is not an issue, wouldn't you want to shift or think about focusing more on your own brand with your own manufacturing, rather than having a balance, or else then you'll have to set up new capacities, right? So that was the only limited point which I had in my mind.
Yeah. So if we look at the existing capacity we have and the incremental additions required to increase it, so let's to go from 1 shift to 2 shifts or to go to 3 shifts, etc. Over the next 2-3 year horizon, meeting capacities is not an issue. Beyond that, we will evaluate the capex required for either category and then decide. But from a business relationship point of view, if you are opening up OEM relationships, we don't see these as short term. That's the only limited point that I'm making.
Got it. And sir, at what scale do you break even in this plant? At 300,000, would you be breaking even in this plant?
Yes, we'll be more than breaking even.
Okay, great, sir. Thank you.
Thank you. Reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Srikanti, individual investor. Please go ahead.
Yeah. Hello. Hello.
Yes.
Yeah.
Yes.
Yeah. I think one of the key aspects I understand from the business is on the operating leverage. Even if the sales get disturbed a bit, I think we are not able to make much of profits, and I think the circumstances for the last 2 years have not been kind to us or the industry as well. So on the same point, are we thinking of, we have ACs for the very near term and kitchen categories, modular kitchens and kitchen appliances over the long term. But in the next 1 to 2 years, are we thinking about any new product introductions which will help us leverage our channel, so that our operating leverage is better utilized? Any thoughts around that?
So, the answer to this would be in two parts. For what we need to do on the revenue and profitability side, what we have today is good enough in terms of short term and medium term as well. Going forward, in terms of the operating leverage or channel leverage, so there is this category of refrigerators which would fit very comfortably with the network, etc., that we have established. This is something that is still under evaluation within the company. So, if you look at, let's say, the next 3 to 4 year horizon, then this would be the basket.
Okay, that's helpful.
Does that answer your question?
Yeah, that's helpful.
A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Karan Sharma from Credence Capital. Please go ahead.
Thank you, sir, for the opportunity. I just want to know what is your EBITDA margin excluding AC and engineering division? And because despite our product price is higher, but then also our margin is lower as compared to the peer company. And what is your strategy to gain market share in AC division? Thank you.
So, Mr. Chatterjee, would you like to answer the first part? Then I can answer the part.
Yeah, the first point is the engineering margins are higher than the appliances. Again, it is dependent on revenue, but the engineering, the EBITDA margins are higher than this thing. They are always in the double-digit margin. And appliance, it is dependent on few things, which Mr. Ray will now explain.
So your question was on the market share on the AC side, and our market share on the ACs requires us to complete placement of the product that we have across all the channels that is available to IFB. Now that is a job that is still not complete. It has been affected by the shutdown. That is the job that we have to complete this year. And once that placement is complete, we will get the volumes that we have indicated. In fact, in the counters where we are already placed, our volumes are good, basically.
So one more thing, actually, I just want to understand how much is our EBITDA margin excluding AC and engineering division for other appliances. So it will help you understand our actual EBITDA margin as compared to the peer group companies.
So we don't give the segmental margins, but if you could speak to Mr. Chatterjee separately, maybe he'd be able to give it to you. Mr. Chatterjee?
Yes. You can speak to me separately, but normally we do not give any guidance or any indication on margin product price.
Okay, sir. Thank you.
Thank you. Reminder to the participants, if you wish to ask a question, please press star, then 1 on your touchtone telephone. The next question is from the line of Prateek Singh from Motilal Oswal AMC. Please go ahead.
Yeah. So thank you for the opportunity. Could you just give a sense on how the demand or, how the sales have been in the month of July and till date August? Maybe if not quantitatively, some qualitative aspects on washers and other products.
So the sales in July was good. It was significantly higher than the previous July. And August till now has also been healthy. So we expect the demand to remain healthy. And this is definitely there in the category of washers, microwaves, dishwashers, etc. In the case of ACs, wherever we have placed ACs, there is also healthy uptake.
Okay. So, sir,
do I add something?
yes, sir.
Like, in all categories, there are substantial growth actually compared to the July last year, number one. Even if you see AC, last year we did 2,600, this year we have done 10,000 plus basically. But the point is, in case of AC, our expectation was much higher. But in all other product categories, the front loading, top loading, tire, microwave, dishwasher, compared to last year, same month, there is substantial growth, both in quantity as well as value terms.
Right. Right. Sir, just a follow-up. In terms of ad spends, etc., so have we scaled back to our pre-COVID levels, or are we still behind?
In this year, we have actually invested for the air conditioner category. So if you look at the ad spends per se this year, they are higher than last year because we took a decision to invest to grow the AC category. So through the April, May, June period, and also now, we have specifically put money above the line and also below the line on the AC category.
Right. So we endeavor to continue our ad spend throughout this year, just in case of.
So if you compare it to the last year, then the levels will remain the same. However, this will increase to the extent of the investments that we make to grow the AC category. Rest everything will remain similar.
Right. Got it. Thank you, sir. Those were my questions. All the best.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then one on your touchtone telephone. The next question is from the line of Pavan Kumar from Ratnatraya Capital. Please go ahead.
Sir, has the AC plant depreciation fully been factored into our Q1 result?
Yes, of course.
Okay. So, secondly, on the CapEx side, so we are talking about some 34 crores CapEx on the engineering side. Apart from that, are we doing any particular, what is the planned CapEx for FY22 and FY23?
There are some, there are some routine CapExes there for both engineering and appliances. In the first quarter, we have done around 19 crores of addition. 6 crores, 6 assets.
How much, sir?
19 crores.
Okay. And for the full year, what can that number be?
As of now, the 34 crores from the motor division, another 15 crores from engineering, and routine capex of 10 to 15 crores for the EJD, because for the appliance division, we are evaluating about the other categories. As of now, we have not decided on that.
Okay. Okay. And on the AC side, sir, how are we planning to do 3 to 4 lakhs, since the peak season seems to have already passed? And how far have we come in terms of placement of our AC as products? And also, can you give us an idea of what are the kind of margins you are expecting for doing contract manufacturing of your AC?
So, if you look at placements of air conditioners, then as on date, we are placed in around 2,100 counters across India, and our target within this quarter is to take this to 4,000 counters.
Okay.
The availability of the IFB front loaders, for example, is 12,000 counters across India, and air conditioner placements in the market are much more than front loaders. So the headroom of growth in AC is beyond 4,000, but that is our immediate target in the next few months.
Okay.
As far as the margin profile is concerned, the OEM margins, of course, are lesser than the brand margin. But as we have shared, the OEM volume helps the overhead allocation capability. ACs as a category overall, we'll have slightly lesser profitability compared to, let us say, a front load segment for the company. but it will add a significant amount of gross margin on the same or similar level of overhead. So the increase behind the revenue is that, at the end of the day, it is the same salesperson going to the same counter. The only incremental addition is the factory expenses. So from that point of view, the revenue is accretive to margin.
Okay. And have the supply chain issues got resolved? And from the raw material perspective, what is the sense of the market as of now?
If you look at commodities in terms of plastics and metals, what happened around December, Jan of the last fiscal year is there was a significant rise in the commodity pricing, and there was also shortage. Now, prices have stabilized a little bit, even in July there have been a few increases, but supplies have stabilized. The supply chain for electronics still remains very stressed. So this stress is coming from two areas. One is, of course, prices having risen significantly, but there are also shortages on things like chips, etc. So our inventory pipelines have increased, order pipelines have increased, and even though our availability scenario is okay, but it is still very stressed.
Okay.
So I would say commodities are okay as of now in terms of supply. Electronics okay, but still stressed.
Okay. I got it. And one last question, if I can squeeze in. How much amount of further price hikes do you think we require to actually balance further commodity price hike and the component price hike since this January?
So depending on the category, I think a further price increase of anywhere between 4 to 6% will probably be on the end. We'll have to wait to see what happens in this quarter, but we could expect price increase around that level.
Okay. 4 to 6% would be further required. All right. Yeah. Okay. Thanks.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Prateek Podar from Nippon India Mutual Fund. Please go ahead.
No, my question was answered. Thank you.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Pawan Kumar from Ratnatraya Capital. Please go ahead.
Sir, on other expenses side, this particular quarter, were there any one-off? And is there, because we are expecting the EBITDA margins to bounce back, is it going to be because the scale of the operations are going to be higher, or are we going to try and cut something on the cost side also?
I will explain. There are two things actually. In operating expense, roughly it is 76 to 80% is variable. Okay. For example, freight, franchise expense, service expense, warranty, these are these things. And there are 20% is fixed, which the last year to a large extent the operations were closed. Understood? As a result, those expenses were lower. But now that we are going back to the normalcy, as a result, the expenses are higher. But the expenses are all controlled. And this is linked to operation only.
Okay. So whatever on the other expenses side, we should consider it as a regular run rate, right?
Yeah. There is nothing exceptional on this.
Okay. And on the employee costs also, is the
employee costs, like I said, that the last year, April to June, there was a graded cut for all people actually. And this year, there is no graded cut for any employees, number one. And this year also the people have been given increment in line with the market basically. As a result, these two together would be higher than the last year.
All right. All right. Okay. Thanks.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then one on your touchtone telephone. The next question is from the line of Shrikant, individual investor. Please go ahead.
Yeah. Thank you for the opportunity. Continuing from one of the earlier participants, where we are talking about, there's some stress on the electronic components. I could recollect from one of the earlier calls that we were working on localization of control panels. If you could give an update on how that is progressing and when are we likely to conclude that would be helpful.
Yeah. For the localization for the controllers for the washers, we had completed last year itself. So those are completely localized. The air conditioner controller localization is in progress. That means controllers are in field trial from the month of June. We expect to finish the field trial by mid-September, and by October our usage of the localized controllers will start. By, let us say, December or January, we will be on 100% local controllers in the air conditioner. This is the present time frame.
And these localization of these controllers on AC will be margin accretive, if I'm not wrong.
Yes. Margin accretive.
Okay, that's really helpful. Thank you.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then one on your touchtone telephone. Reminder to the participants, if you have a question, please press star then one. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Mayank Bhandari for his closing comments. Over to you, sir.
Yeah, thank you. We thank the management for taking time out and sharing their valuable insights on the call. And we also thank all the participants for their presence. And sir, do you have any closing remarks?
Thank you all. Thank you all for joining the first quarter conference.